Hi guys, welcome back. I wanted to just do another video, but again, as a part two with regards to our bias, because what we've spoken about so far is two candles of a three candle formation. We actually now want to talk about what happens in the third candle. So, for example, let's just say, for example, here we do not close below this low. Well, in that case, we are going to just wait. We're not going to do anything. And we're going to wait for the next candle to open and do whatever its thing is. Now, obviously, if it continues to trade lower, then no matter what happens in this situation, this is invalid. This three candle formation is irrelevant. Now, let's say we actually continue to respect this low, but what we actually have here is a situation where the candle changes bullish. So now what it actually currently looks like is like that. If this happens and this particular candle engulfs the overall high or the overall opening, in fact, of the previous candle, I would anticipate, again, that the next candle, as in week 4, because now we're talking about week 3, I would anticipate that week 4 would be bullish. And again, I am measuring this here and hoping that the upper half gets respected. So I would be looking inside the upper half for areas of confluence that I can use. That is how I'm identifying my bias. And again, if it actually was to create a big wick, I don't know why it would in this situation, but then I would measure the wick and not the body. So it's a little bit subjective, but that's essentially how I'm utilizing a three candle formation to help clarify my bias for the next day or the next week. And again, you can look at plenty of examples where you see very similar stuff happening. For example, we have this particular area here, and then we have price action on this candle closed all the way lower. So we can anticipate the next candle's moving lower. But you can see the third candle continues moving lower anyway. So the next candle should continue lower as well. Once again, we have this low here, huge bullish candle. So we're utilizing the second candles to anticipate the next day is going to go higher. What we obviously, I mean, there's a few gaps of in price action in here, and you're going to get a lot of gaps when it comes to weekly timeframes. But in fact, if you go to a daily time frame, this is going to help you with identifying your bias each day. So if you're in a consolidating phase, you think to yourself, okay, let's move on to a particular pair, which makes a little bit more sense. So for example, today's candle is very, very bullish, and it's also created this low. So I'd anticipate if we close in the next 6 hours exactly like this, bear in mind we're going to be miles above the low and even more higher above this candle, the opening of this candle. So I would be measuring, let's just say the candle finishes here. I would be measuring this area and hoping that gold respects the upper half. So I would then go to a smaller time frame and I am identifying my areas of confluence. So my key area on gold in real time as we speak is this 4-hour area. That is how I come up with my areas of inefficiency. That is what I look for, essentially. And again, you can do this from a 4-hour perspective as well, because that's how powerful this whole thing is. Again, you can see with this particular low or high, sorry, but it closed miles. Well, it didn't actually, it was here, and it didn't close below the low. So we don't know if this is going to go bullish or bearish the next day. So what do? You wait. You wait for more information to print. And again, the next candle doesn't really give us too much to hope with, but then the next candle ends up being pretty bearish anyway. So, and this is the beauty of utilizing these specific candles, because you can anticipate what's likely to happen. You can see here we've got a low, and then this particular candle closed here, which was higher than this low. The next candle printed, it respected the upper half of this candle, pushed higher, completely engulfed this candle and even this candle here. So that you would anticipate price action is going to be bullish from here on out, which it was. So go and do some homework, have a look, see if it makes sense. Find out which candle you prefer utilizing, candle 1, 2, 3, in whatever formation you actually have, because it's going to help you with everything. Now, I don't use this. I just want to say this here. I don't use this for 15-minute, 5-minute entries. I don't use it as an entry point. I use this to determine my bias. It's literally as simple as that. Example, today, as of this recording, it's a Wednesday. So if this candle closes like this, I'm identifying that I have a low. I'm identifying that we close here, which is obviously above this low. I'm anticipating the next candle, as in tomorrow, which would be Thursday, to be bullish, which means I am looking for bullish price action to happen inside this 4-hour area. So if I have price action come tomorrow lower, and then maybe on a 1 hour or a 15-minute or something, that sort of pattern starts to happen, I have got a trade idea, which was given to me with a bias I already set out. Hopefully you guys have enjoyed these 2 lessons. This really does confirm what we're going to look for in bias. We're going to move on to the next thing in the next lesson. So if you have any questions, please feel free to reach out.